Welcome to the show, Professor of Taxation, Professor Lisa Marriott from Wellington University, Victoria University. Lisa, thanks for joining us.
Oh, you're welcome, Pat. It's great to be here.
Yeah, thank you. A great background you've got going on there, looking down over the hills of Wellington somewhere, up in Brooklyn or something from the looks of things.
Oh, well, actually, funnily enough, I used to live in Brooklyn. This is actually looking now more towards the Botanic Gardens, actually, so that's a wee bit closer to town. But yeah, Wellington's very, very green.
Yeah. Hey, thanks for joining us. Completely unrelated to the conversation around wealth tax. Being a professor of taxation, do you get all sorts of people hitting you up for advice on their taxes? Like, can you give me what do I do with my GST? Does that actually happen to you?
Oh, well, actually, funny enough, it does a tiny bit. But yeah, I actually no longer have a practicing certificate. So in fact, I'm in a quite a good position where I actually do not give tax advice. So it's easily resolved.
I read your article, and we'll bring it up here as well for other people to see in the conversation, which is a spectacular write-up. I'm subscribed to it, and I hear from them when they send out their information. We've been talking about a wealth tax here on this show a handful of times in the last couple of months. Obviously, it became news again when some media were pressing the Prime Minister to guarantee she wouldn't do one for the next election, and she very clearly said, "We haven't looked at it. I'm not going to answer this question because there's nothing I can say because we haven't looked at it." So that put it back into the headlines, and we started talking about it. One of the difficulties we're talking about this conversation is it's a little bit theoretical because the Labor government don't have a policy on wealth tax. We can't actually speak to any great specifics. So what we've done is we've had a look at what the Greens were proposing because they did have an idea. But I guess I wanted to just talk about it again, seeing as we just see there, your article says, even if next week's budget avoids the issue, it's time New Zealand seriously considered a wealth tax. Why is it time that New Zealand seriously considered a wealth tax?
Yeah, so tiny bit of tax theory first, if I may.
Yep.
I'll keep
it go for it.
Level. So really there's three ways that we would normally tax, and one of these is income, and we tax that really well in New Zealand. So that's individuals' wages and salaries. The second is in consumption. So this is our GST, our goods and services tax, and again we do this really well in New Zealand. The third way we would normally tax is this idea of wealth, and we don't really tax that comprehensively in New Zealand. There are some types of activity where wealth is taxed, but it tends to be only if the particular transaction is included in the Income Tax Act. So most countries generally have a general sort of capital gains or other type of wealth tax, which means that those transactions are automatically taxable. We tend to take the opposite approach, which is what, unless they're specifically included, then they're not taxable. To the specifics as to why we should tax wealth, well, and this is my personal opinion. The article was actually that we're a democracy. We should have a discussion about it, and we should be allowed to express our views on it. So my view is that we probably do need a wealth tax. Reasons for that is because of inequality. We see in particular wealth inequality increasing in New Zealand, and Max Brashbrook has some really nice figures around that, where the wealthiest 10% of people own 70% of the wealth, and so on. And wealth accumulation does tend to be self-reinforcing. So you've got the returns to wealth, which tend to be larger than gains on income, for example, and you have the wealth which is accumulated in a relatively small part of society, and that just keeps getting bigger and bigger. It's not taxed as it moves through generations, so the inequality problem is unlikely to be addressed in the absence of a specific instrument to address it.
Could we give an example, even if it's using the Greens policy idea, of actually what a wealth tax would do? Because part of, I think they had a threshold of $2 million, because part of me thinks, and your article states this, and I think it's right, that it would be a pretty unpopular tax to bring in. But part of me thinks if it is only impacting the top 10, 15%, that means for 85% of the country, it should be popular. So I'm interested as to why it's unpopular. But before we go there, we should probably just think, like even if it's another country's example or an example of what a wealth tax would actually do in a practical application in society?
Yeah, yeah. It's a really good question because when I've talked about wealth taxes, I've used that phrase to capture the various different types of taxes that we would probably use wealth tax for as more of an umbrella type of term.
Right.
So I've included in examples, it could be a land tax, it could be a capital gains tax, it could be a wealth tax like the Greens have proposed, it could be an estate inheritance type tax. All those sort of taxes are different types of wealth taxes. The Greens one is interesting, which is the idea that you would tax on a specific amount, so 2 million if that's what is proposed. And if you have a net wealth above that amount, then you would pay a small proportion of tax on anything above that amount. So how that would work is, say you've got a $4 million house and you've got a $2 million mortgage on that house, you'd have net wealth of 2 million, and then for everything above that 2 million, you would pay, as I say, normally a really small amount, so perhaps 0.5% or something like that. The issue with that type of tax is it can be difficult to actually pay because a lot of people have assets, but they might not actually have the cash to pay the tax as it falls due. So, I mean, there are ways around that, deferring the tax until the asset is sold and so on. But that's why those types of wealth taxes tend to be a bit less popular in countries these days. So things like capital gains taxes, the tax event, so the actual tax is due when the asset is sold, and usually people would have the funds to pay the tax when the asset is sold and there's the gain has actually been made. You also have a market transaction at that point, which is quite good to actually accurately measure what the gain is on that asset.
Yeah, because one of the ones, and I brought up the Greens while I was talking to you there. It's a progressive tax, and I wonder if that kind of tax idea. I'll just read this out quickly for people. By introducing a new tax on individuals' net wealth over $1 million, this means those who have their own wealth worth more than $1 million, not including mortgages and other debt, will be asked to pay a small annual contribution to fund stronger social support for all New Zealanders. This would only apply to the wealthiest 6% of New Zealanders. Is the kind of tax, and correct me if I'm wrong, you are the person to correct me, that would also be repetitive though. If you had those assets and you got taxed in this financial year, and if you still had exactly the same, you'd get taxed again in the next financial year. I don't know about the idea of taxing the same thing on multiple times. Like my PAYE goes out, my money goes into the bank, the tax is finished on that. If that stays in the bank, I get taxed on any interest I earn from that money in the bank, but I don't get taxed again on the money that's in the bank that I've already paid tax on. There does seem to be something quite strange about, let's say I've got assets worth $3 million, paying a tax on them, and then next year paying a tax on them again, and then paying a tax on them again, which is where I think the, paying the tax when you sell a house, capital gains seems to make more sense. Is that one of the problems with that kind of tax, paying multiple lots of tax on the same item or asset over and over again?
Well, yes and no, because those types of wealth taxes tend to be at a very low rate, so maybe 0.5% or something
Right.
like that. That's why it is an ongoing tax. But to your point, you're absolutely right. It is an ongoing tax every year to the extent, and actually, $1 million is probably, when we've see what's happened in the housing market, $1 million of wealth is actually not really probably a lot these days. I would have thought, I mean, they're saying 6%. I actually would have thought it would capture a lot more people than that. But part of the problem is we don't have particularly good data about the wealth that people hold. So it would be quite hard to actually say with any certainty exactly how many people would fall into a tax like that. But the idea is that actually what they're trying to get at is the tax does only fall on the people who have the greatest amount of wealth, which, like I say, in New Zealand is probably not at $1 million these days.
I've often talked about the capital gains tax. That one of the downfalls of a capital gains tax to me seems to be, for so long, like under Robert Muldoon, there was a good savings scheme and there was a good scheme for retirement, which was then basically cancelled. And then we didn't
Yeah.
see any other saving scheme for retirement until KiwiSaver came in. So what a bunch of New Zealanders did went, oh, I have to look after myself. I'm going to buy some extra properties, and that's going to be my retirement. I've always kind of said, and it's a bit of a wacky idea, that I think there should be like a moratorium to the date KiwiSaver started. Houses purchased before then should be exempt of capital gains tax, because you've got those 70, 80, 90-year-olds now who might still be living off those because they had to look after themselves because the government didn't have it in there. But then maybe houses bought after that date when there was an alternative, which was KiwiSaver, maybe they could be applicable to a capital gains tax, just because it does seem a little bit on the nose to have all those elderly people today, well, all those, the numbers who are able to do this, who may have purchased properties to look after themselves in their retirement, now be taxed for that because the government wasn't looking after them well enough in the 80s and 90s. You know what I mean?
Yeah, yeah, and I think it's a fair point. What normally happens with taxes that would be quite a radical shift like this is they wouldn't be retrospective, because to your point, people have made decisions on the information they have at the time, and it really isn't fair then to effectively change that environment. So normally what would happen is the tax would come in from a future date. So there might not be a lot of notice, but it would normally be at some point around about the announcement. So it would be unusual to be retrospective.
The idea of this going to the polls, this being an idea that we put to the people and they want to vote on it, from knowing a little bit about the inside workings of many political parties, they spend a lot of time researching and, feeling the pulse of the nation and seeing what they're thinking. I would think that their internal research must show them that this is unpopular, and that it must show them that this wouldn't be something that a lot of New Zealanders would support, because if it was, then they'd be in. So it's not a guarantee, but I wonder if, what is your opinion on, would New Zealanders support a wealth tax, or is the evidence that no one wants to do it evident that New Zealanders probably wouldn't be in favour of this?
Yeah, it's such a good question. In my view, I think if people genuinely understood what a wealth tax is and who
Yep.
would pay that wealth tax, I actually think most people would be in favour of it, especially when you looked at what would be the result of having a wealth tax. So if we had a wealth tax and it would collect more revenue, the outcome of that would be either other taxes could be reduced, or we could have more spending, and who wouldn't want more spending on the health system or
Yeah.
education or whatever it is. So, there is a real trade-off here. It's not just that people pay more tax and nothing else changes. I think the really important thing with these discussions on wealth taxes is we need to have good, sophisticated debate, and we need to have good information which is publicly available. So people need to understand that these taxes are not targeted at their one and only asset, which is their private family home. That's never the intention, that these taxes capture that type of an asset. They really are genuinely intended to capture or for people to be paying tax on the greater wealth, which is not taxing every last cent that people have by way of assets. So I honestly think if people understood that, there could be a greater acceptance. But it's a hard message to get out, because there's a lot of misinformation, and also people will just hear that is more tax, and it might impact on me. And there are, of course, aspirations. People always aspire to be wealthy, and when I'm in that top 5%,
Yeah, of
then
course.
I won't want to pay tax on my wealth. So there's a little bit of that as well. But like I say, if we were to signal that the proportion of people who will pay this is the top 10%, but of course they wouldn't be happy about it. But the other 90% who would ultimately be better off, you'd wonder why they wouldn't.
You talked about wealth tax being sort of an umbrella term, not necessarily like the Greens are talking about being quite specific. And you've talked about there could be, this could happen several different ways. Do you have let's say that the government was able to get one or two of a version of a wealth tax through. What do you think would be a couple of the low hanging fruit, the ones that might be easier to get through and most received well by the country?
Yeah, that's a really good question. I quite like the idea of a land tax. The reason for that is it's quite simple. There are valuation methods already in place. it's hard to hide by way of, with other assets. They can sometimes be a little bit easier to avoid. So there's a certain simplicity that would sit alongside a land tax. And simple taxes are actually quite good taxes because they tend to be easier to collect, easier to comply with, and so on. The other thing with a land tax is that you can make exceptions quite easily if you want to. So in the article I wrote, the Māori land, for example, you might want to carve out that. You might want to make concessions for productive land, farming land, those types of things. So there may be specific policy changes that you might want to make, and that they're quite easy to do with a land tax. So from a simplicity perspective, I do quite like that. The capital gains tax, I guess, is a very similar, except it usually goes beyond, would go beyond land and catch things like people's other investments, so financial investments in the form of shares and that type of thing.
Yeah, all right. I remember interviewing Hone Harawira back in the day, and I think the Mana Party had an idea about a transactional tax, and he described it to me. And he basically said, I think it was 1% transactional tax. And he described it to me basically, and I said, so if I earned $1,000 a week, and let's say I drew all of that money out of the bank, my tax on that would be $10, and that would be the only tax, like no more PAY. And he said yes. And his numbers worked out that because obviously companies, all those parties that are transacting a lot more and a lot higher figures, that overall it would be at least as much taken tax, if not more. Was he right? Is a transactional tax a reality, or was that just something that minor parties sometimes say because they can get away with saying anything because they're never going to be held accountable?
It's a great question. So for a while, and look, it might have been around about 10 years ago, the financial transaction tax was talked about in Europe, and they actually got quite close to introducing it, but ultimately I think it just ended up in the way too hard pile. You've described it really well there. So the idea is you have a really, really small percentage on every financial transaction. So your share transactions, as you say, your bank accounts, all your FPOS transactions, all those types of things. I actually had an honours student crunch some numbers on this around about the time that it was talked about in New Zealand, and we really struggled to get anywhere near the numbers that it was proposed. I mean, even actually at quite a high rate, we were still like maybe about only around perhaps 10% of what the current tax take is. So we couldn't really see any way to make that viable.
All right, very good. Now, briefly and finally, you talked before about who doesn't want more income to put into our health system. I guess my response to that is often right-wing parties seem to want less tax in the coffers to put into things like the health system. I'm a very simple man, Lisa, and sometimes I think about the budget to our country being like the budget to my household. And, sometimes I want a bit of money left over in the bank for when my hot water cylinder blows up, or if I lose a job and have to look after myself for 6 months, or whatever the case may be. It seems that there is I guess what I want to ask you, maybe if you've got a thought on this, is why does and I'm saying the right in politics, so I don't want to point fingers at any one party, seem to try and convince us that less tax is better, when I'm not saying you're saying this, but your point of a little bit more tax for the health system would imply to me that a little bit more tax, a little bit more than we need, might be the way that we keep ourselves safe from, a rainy day. Is there a philosophy around why the right is always about, less tax is better, less tax is better?
Oh, I think it just comes down to the size of the state. So the right parties tend to want a smaller state. So smaller states, less spending on health, less spending on education, less spending on, in general. And of course, if you're spending less, then you don't need as much revenue, and therefore you can reduce taxes. So, I mean, in my very simple understanding of it, that's how I would see it. Whereas the left-leaning parties do tend to want some more investment in society, and we need to pay for that. So there is the tax system.
You put it so succinctly, but see, it just makes so much more sense to me. It's like, of course, if we want more investment in society, we need a little bit more tax. I always wonder when we get promised like $10 tax cuts a week, Yeah, that's $1 billion out of the tax coffers, and $1 billion in the tax coffers to me feels more important to the country than $10 a week to me personally. But then again, maybe I'm not unique in that thought.
Yeah, again, I think it comes down to your personal philosophy, doesn't it? You
Yeah.
know, are you more individualistic or are you more community focused?
Yeah, I think that's fair. Professor of Taxation, School of Accounting and Commercial Law, Professor Lisa Marriott. Lisa, thanks so much for joining us today. I very much appreciate your insights into the wealth tax and other taxi issues.
It's been a pleasure, Pat. Lovely to talk to you.